You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-Mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-Mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Thursday, 14th day of July, 2022. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts each and every day. The first live broadcast is our live training room. That's from 9:30 a.m. to 11:30 a.m. Eastern. And that, of course, is reserved for members only and those who are taking their 1-week free trial. Later in the show, Michael will explain and show you exactly how you can take your 1-week free trial. During that week, we treat you just like a member. You have access to all the tools, to a trial discussion group. We teach you in the live training room the strategy, the methodology, how to read the indicators. We pack a lot into the 1 week, so when you sign up for the trial, come ready. Now, the afternoon broadcast, which begins at 12 noon Eastern every trading day, there are 2 different ways to join that, or this broadcast, which is open to the public. Everybody, everywhere. You can go to eminitrainingschool.com, scroll down, and you'll see afternoon broadcast. Just click that. The same way as when you go to the home page at cfrn.net, that microphone on the side, on the right side, click it. Either one of those is going to take you to a registration page. It'll take you about 30 seconds to complete the registration, but once you're done, you don't have to register again. What will happen going forward, once you complete the registration, is right before the show starts, each and every day, you'll get an email. In the email, there's a link. When you're ready to join the show, click the link in the email. Now, why is that the better way to join? Because it gives you access to the question box so that you can ask questions and participate in the discussion. Now, there will be days, maybe you don't have any questions, or you're out of the office, away from your desktop, whatever the case. If you want to join the show live, you can simply point any internet-connected browser to youtube.com/CFRN. Not only do we simulcast the show on our YouTube channel, but we also archive each and every daily live broadcast. Currently, over 2,000 individual broadcasts archived for your educational and viewing pleasure. And if you're new to CFRN, it gives you a chance to see what we were up to and talking about 6 weeks ago, 6 months ago, a couple years ago. You'll find not a lot has changed because our strategy and methodology is built on the underlying principles upon which markets operate. And those underlying principles have been in existence since the inception of the markets, and they will remain in existence until the markets cease to exist. Now, some people get addicted to the hunt, looking for that holy grail, that one thing, that indicator, that oscillator, that algorithm, that guru that's going to allow you to knock it out of the park every day. and never know the agony of being stopped out. Well, let me save you a lot of time and a lot of treasure. No such thing exists. It can exist based on the laws of science, physics, even God. Speaking of the big guy, and when we say the big guy, we're talking about the real big guy. Let's open up with a word of prayer, as we do. Now, we talked a little bit the other day about, I said, I think there's nothing wrong with owning a Rolex as long as the Rolex doesn't own you. Nothing wrong with driving the latest Mercedes or a Ferrari or even a Lambo as long as you own it and it doesn't own you. And there's a huge difference. 1 Corinthians 10:13 talks about the temptation of materialism. Here's what it says. No temptation has overtaken you except something common to mankind, and God is faithful. So he will not allow you to be tempted beyond what you are able, but with the temptation will provide the way of escape, so that you'll be able to endure the temptation, whatever it is, and not fall prey to it. The other day I saw a post on Instagram that said, I saw it, I liked it, I bought it, now I gotta hide it. Although the little graphic was created to make people chuckle, it really kind of makes me sad how much these words speak to how consumed with consumerism that we've become. Maybe a little less of late because of the inflation. But in our current society, you cannot use your phone without being sucked into the black hole of materialism. Sponsored posts advertising nonstop on your social media accounts, and bloggers who are full-time marketing tools for companies filling up your newsfeed. It seems like you can't really escape it anymore. Do you feel the pull to buy more of what is before your eyes because someone else has it? FOMO, fear of missing out. The compulsion to click add to cart and check out can be overwhelming. If you don't need it, why are you buying it? Do you cover what another has? I've heard it said that we buy things we don't need to impress people we don't like with money we don't have. That's a sad statement of affairs, but it's true in our world today. Now, when you feel this compulsion, maybe you're, it's the FOMO, whatever it is that's driving you. If you don't need it, why buy it? Now, when I, at a point in my life, didn't have 2 nickels to rub together, as soon as I had 2 nickels, or $1 or $2, couldn't wait to get out and spend them. But once my life changed and God began to bless me in every area of my life, including financially, I was able to walk by endless rows of merchandise on the shelf, pick it up, look at it, that's cool, and keep walking. So where are you at in that whole drama? Now, I know you've asked yourself countless times, I don't need this, why am I buying it? Remember, covetousness It's not a good thing. Hashtag Target made me do it. Hashtag influenced have become a reality in many people's lives more often than they would care to think about. You know, it's often a joke among women that they hide their Amazon Prime packages or shopping bags from their husbands like it's a secret behavior that all women do, and it's totally normal. But I got news for you. That's wrong. And quite frankly, it is a sin. So why do we make jokes about that? Let's call this what it is and admit we have a problem. This behavior of materialism is rooted in covetousness, and it's not a joking matter to God. In fact, the Big Ten, as in the Ten Commandments, it's right in there. Depending upon your translation, it's basically saying don't covet your neighbor's ass, and it's talking about his donkey. The other one is covered in another one of the Ten Commandments, where it says thou shalt not commit adultery. So what is covetousness? It's a strong desire to have that which belongs to someone else. It is considered to be a very grievous offense in Scripture. The 10th commandment forbids coveting anything that belongs to a neighbor, including his house, his wife, his servants, his ox or donkey, or anything that belongs to him. It's in Exodus 20:17. Jesus himself listed covetousness or greed along with many of the sins from within the Sermon on the Mount. Now that graphic I mentioned on Instagram, it really isn't cute and should reveal to us the matters of our heart. Do you wrestle with impulsively buying things you don't need? Many people do. Many people have homes filled with stuff, brand new stuff, hanging on a rack, sitting in a bag, still got the tags on it, never been worn, never been used, and probably never will be. Now, just because we're tempted by something doesn't mean we have not been given help to escape. We read that in 1 Corinthians 10:13. God will always give you the power to say no when that little voice inside of you tells you that the right thing to say is, I'll pass. The temptation is strong and may seem like it surrounds us at every corner. From the TV to the radio to the social media, even in your email, even now in your text messages. But God can help us overcome the temptation. He always provides a way out. So let's keep our eyes on that escape and ask the Lord for strength when temptation comes. Let us also learn how to confess that when we are tempted and hold each other accountable. Everybody needs somebody in their life to hold them accountable. Now, for married couples, that most likely is your spouse. Could be your pastor, could be an elder at the church, could be somebody you just get together with once a week to talk about the things of God over a cup of coffee. Give that some thought and pray with me. Heavenly Father, materialism and consumerism constantly bombard us. I admit there have been times I've been overtaken by the tidal wave of temptation to buy things I don't really need. Instead of budgeting for items, I make impulse purchases. I ask you to help me when I face the temptation to buy things that I don't need or perhaps want because somebody else has it. So I gotta have it. So I need your help, Lord. I may be tempted by materialism, but I do not have to act upon it and sin against you. help me to see these things clearly and for what they really are. God, I trust that you provide all of my needs. I ask for you to help me and all of us be good stewards of our finances. Help us to be content with what you have given us. Thank you for your grace to overcome temptation and for always providing an escape. In Jesus' name we pray. Amen.
Amen.
And everybody said amen. All right, let me give you the numbers from around the world here real quick. Then we'll go to Michael and get a recap of the live training room this morning. Starting here at home in the U.S. It's not pretty. The Dow's down 339 points, a little over 1%. Now, as futures traders, whether it's green or red really doesn't matter to us because we can trade in either direction as many times as the chart tells us in the course of a day until we reach our goal for the day. NASDAQ, now, of course, for those who are relying on their 401k, their retirement fund, on fixed income, this is not good news. Okay, so I don't want to take it lightly. The NASDAQ's down 90 points, which is almost 1%. S&P 500 is down 37 points, 1%. Russell 2000, our man in the street, down 31 points, which is 1.75%. In the commodity basket, crude oil down another $2.14, trading 94.16 last. That's a drop of a little over 2%. Gold down again, $27.40, trading 17.0810 last. That's a drop of 1.5%. Silver down 91 cents, trading 18.28 last. That's a drop of almost 5%. In the Asian markets at the close, Nikkei posted a gain of 164 points. The Shanghai dropped 2.5. The Hang Seng fell 46. And in the European markets at the close, FTSE down 116, over 1.5%. The DAX down 236, almost 2%. And the CAC down 84, 1.5%. So we had a mixed day in Asia. In fact, the only green on the screen is the Nikkei. It was a red day for the UK, and so far it's a big red Radio Thursday here in the US of A. With that, we'll go to Michael, get a recap of what happened in the live training room. After that, I'll come back. We'll look at the logic alerts, the concierge trade alerts, and for all you passport holders who got your concierge trade alerts last night and took action, you've probably got a pretty big smile on your face today. So we'll go through each one of the alerts. We'll go through each one of the markets when Michael is done. Michael, if you're ready, take it away.
Okay, I'm pulling it over here right now. There you go. All right.
Okay.
You guys should be looking at my chart.
Yep.
Yep, you are. Okay,
Good to
here we go.
All right, it's all yours.
Good. Thank you. Good afternoon, everyone. Today is Thursday, the 14th day of July, 2022. Now, if you've not taken a free trial with us and you want to take a free trial with us, go here to eminitrainingschool.com. On this page, all we ask for is your first name, your email, and your phone number. You can tell us the biggest training challenge so we can tailor one-on-one training just for you. Hit the send button. You'll be sent a confirmation link. You must click the confirmation link. Okay, if you don't click that confirmation link, we don't know that you took the free trial, so you got to make sure you click on that link. Okay? Okay, recap. Now, we did most of the trading today on the 7-tick range, again, like we did yesterday. All right, and again, the results were great. I'll get into all of it, but I took just a few trades on the 4-tick range early on, and then I didn't take any more. I did it all on the 7-tick. But anyway, here we go. I think I already said this stuff about reading the stuff down below. I'll say it again. If you're going to read the spreadsheet, you read all the CFTC risk disclosures down at the bottom. I have to say that. Today is the 14th day of July, 2022. We made 125 ticks in crude, 43 ticks in gold, and 11 ticks on the ES. That put us up at $1,817 on the morning session. Today it took 6 minutes and 4 trades to get to the goal for the day. That brought up $100 a contract, and we took a total of 45 trades. So on the month now, we're at $11,395. That's over 9 trading days, averaging $1,266 per contract per 2-hour trading day. We have now gone 193 days since our last negative day, and we've gotten our goal on 132 out of 132 days so far this year. That puts us at $144,856. We're 132 days, averaging $1,097 per contract per 2-hour trading day. If you were to quit trading when you got your goal for the day and you were to add 1 contract per month, you now would have had to work a total of 18.36 hours this year. 18.36 hours so far this year. It'd be great to have that number be under 40 by the end of the year. Anyway, if you did that, you would have averaged $3,718 per hour. All right, that's with 7 contracts right now. Starting out with 1, adding $2,000 per month minimum per contract to be able to get to the next contract. Then adding 1 contract just at the month beginning. This isn't adding mid-month, which would make these numbers much bigger. Just 1 contract per month, and you'd be at 7 right now. So this morning it took 6 minutes and 4 trades to get to $100 a contract. So that would have been $700 a contract this morning after 6 minutes, and it would have taken 28 round turns to do it. So you can do the math. Would have averaged about, would have come out to about $550, something like that, after commissions and fees and all that for 6 minutes. Not too bad. All right, so let's get into the actual trades. Now I'll start out with the ES, okay, and I'll start out on the 4-tick range, because on the 4-tick range we only took a few trades early on with the ES, and this is where we actually got our goal for the day. All right, and here we had a break-even trade right here where I was looking for it to get down to this level, and it did over here. This is where we got the goal for the day. It was the highest probability short off the BBC. We picked up 8 ticks right there. That's where we got the goal for the day. Now, at the same time, here on the 7-tick range, I took a trade here that ended up being break-even, and I took another one here that ended up being break-even. This one would have given 4 ticks in profit at least, and this one gave about 6 or 7, I think. Either way, I wasn't fast enough to get my stop back to break-even, and I got it over here on the 4-tick range. But that is all we did on the 4-tick range on the ES. So now we'll just go through the 7-tick range trades, okay? So here we stopped out, and then we had a break-even right there, another break-even, and then let's see, we picked up 4 ticks to get us to +2. Then we had a break-even, then we stopped out again. We got -10 on that stop out now. All right, so we're at -2 right there. Then we had a break-even. Then in here we went from -2 to +2. Right here, I think we got somewhere in here. We went from -2 to +2. I think I didn't count all these. The way that it went, we went from +8 to -2, so we stopped out. Then we went to +2, so we had a +4. Then we went to -8, so we had another stop out. I think that's this one right here, but I didn't include all of this stuff in here. And then we went to +1, so we had a 9-tick gain. And then we went to +13, so we had a 12-tick gain. Then we went to let me just look at what else we got in here. Yeah, I think these are a little bit out of order. This last stop out here, there's some things that are missing in between here. But we went from +8 to -2, so we stopped out. Then we had a +4 that got us to +2. Then we stopped out again with a -10. That got us to -8. Then we had a +9 that got us to +1. Then we had a +12 that got us to +11. I'm sorry, +13. And then we had a +8 that got us up to +21. And then we stopped out. This was the last stop out. So this was a +8. This was a +12. This was a +9. So in here somewhere there's a stop out missing. And that was what we did on the morning session. Now, this was all in the 7-tick range. Okay, so the trades that we're taking were either going to be trend line trades based on the slingshot and the bar being either white or blue in a trend line, or having just the right colors and being able to see all 4 lines. Now, I know right here you can't see all 4 lines, but when you're looking at it over here like this, you could see all 4 lines when it was actually happening in real time. You could see all 4 lines. So that's what we did this morning again and again and again. And right here would have been a long trade with all 4 lines. Right here would have been a long trade with the ribbon and the right, with this right kind of separation of the slingshot and the ribbon. And these are 7-tick range bars. So this move to this move is huge. Okay, and in here you would have had nothing all the way through here, nothing until right here. You would have had a short, would have been a break even. If you stayed in it, it would have pulled really close to your stop and then gone down. Right here, all 4, you would have had a short right there. It would have been a nice trade. That was all during the break. All right, so that was the ES this morning. Now, I'll jump over to gold and we'll do crude last. Okay, in gold on the 4-tick range, it looks like I drew something in right there. We had one good trade here in gold on the 4-tick range. I think we picked up 14 ticks on that trade right there on gold in the 4-tick range. Okay, and I don't think we did anything else on gold on the 4 range. We had one break-even trade right there. Okay, and then back here on the 7-tick range. Wait, here we go. On the 7-tick range, right here, our first trade on gold was right here. We picked up 19 ticks. Yeah, 19 ticks on that one. Then we had that one over on the, well, we stopped out. It put us back down to 9. Then we had the one on the 4-tick range that put us up to 23. Then we had a break even there. We had a plus 10 that got us to 33 and another plus 10 that got us to 43. Then a couple of trades that we missed in here and a break even right there. During the break, right here off the BBC, that was a sweet trade right there. I know the guys that were in the room this morning were loving the 7-tick range trades. They were just doing really well with them. And yeah, with the ribbon, they were loving the ribbon trades. They were doing really well with them this morning. And you can see in here during the break, there was just a bunch more trades. If you just draw on the trend lines and look at this separation down there in the slingshot, you know, and the trades, these are 7-tick range bars. So every one of these trades is like a minimum of 10 ticks. Okay. That was gold this morning. We ended with plus 43 on gold. In crude oil, I left crude for last because we had a ton of trades on crude. I mean, crude always, so we had 5, 10, 15, 20, 5, 10, 15, 20, 21 trades on crude. Now I'll go to the 4-tick range. I don't really remember if we did any on the 4-tick range this morning on crude. I don't think we did. I mean, I glanced at it a few times and said, oh yeah, there was a highest probability trade, and there was a highest probability trade. There's one right here. We did do on crude. I don't know how much this one was. I think it was like 20 ticks or 18 ticks. But I think that was the only one that we did on the 4-tick range on crude. But you can see there was so much activity in here. On the 7-tick, we had 20-something trades. And you know, that was just using the ribbon and the trend line trades and everything. So the crude was really volatile this morning and gave a ton of opportunity. I mean, I'm up 125 ticks. And I'll get into that here in just a minute. All right, now all these lines were drawn when I was looking left for target numbers as we were moving along. Our first trade here on crude was this one right here. We picked up 20 ticks on that. We had a break even there. Then we picked up 3 ticks. And then the next one we picked up, looks like 18 ticks to get to 41. Break even, then 10 ticks to get to 51. Then 10 more ticks to get to 61. Then somewhere there's 10 more ticks to get to 71. Then right about in here, I think, is where we got that other 18 ticks. Is that right? No, we had a 20-tick trade. That might have been what we got on that one on the 4-tick range. It might have been 20 ticks over there because we went from 71 to 91. And then we had a break even and we stopped out. So we went from 91 down to, in this case, we went down to 81. Okay, and here we went from 81 back to 90, so I picked up 9 ticks there. And from 90 to 99. So I picked up another 9 ticks, and then 1 tick to get me to 100, and then we didn't do anything for a little while. Then went from 100 to 120 right there. So I picked up 20 ticks there. I had a break even. Then went from, wait a second. Went from 100. Sorry, it wasn't 120. It was 111. So I picked up 11 ticks. Then I had a small trade that got me to 113 ticks. Then I had another small trade that got me to 114 ticks, a break even, and then a 10 tick or 11 tick trade that got me to 125 ticks. So it was definitely a lot of opportunity this morning. And that's just what we got. I mean, there were trades in there that we missed too. There were a bunch of trades in there that we missed. But when I was really focusing on one market with the 7 tick range as active as it was this morning, it's easy to see the trades coming. You just look for the ribbon. When you see the ribbon, you wait for the trade. If it's going to be the right color when it hits the ribbon, you can take it. If it's approaching the ribbon and it starts changing color, then you got to look for the separation and draw the trend line. Then you're just looking for the separation and the trend line. It is just so much easier to do. During the break, the obvious trades are like this one right here, blue off of 4 ribbons, blue off of 4, blue off of 4, red off of 4. That was red off of 4 right in there, red off of 4 in there, red off of 4 right here, blue off of 4 right there. It's just giving trade after trade after trade. All right, now I want to show one more thing in here. This is Trading View. Now this is a 20 tick range, right? A 20 tick range. And you can see here, hang on, let me move this over. You can see here that, this is the thing that we're working on. And this, I don't know when I'm going to roll it out, who I'm going to roll it out to, how all that's going to work out. But these are 20 tick range candles in crude oil. So every one of these bars is $200 a contract. And you can just see that on a day like today, it was doing really well. Now, this is all the same stuff, and this is in Trading View. All right, I know a lot of you guys are out there on Ninja Trader, and you're wondering when we're going to get it to Ninja. The answer is soon. Okay, we'll get it to Ninja soon. What's the date right now? This is 7/14. It'll be soon. I would say by the middle of next month, we should have it in Ninja Trader. Okay. If we get it sooner, we will. If we can, we will. But this is what it's looking like right now. All right, these arrows will not be part of it. All right, I don't even know if I can do this on other trading platforms. I know I can do it on Trading View, but I don't know if I can do it on other trading platforms. Okay, so I just wanted to show you that stuff too, because that is what we're working on in all the things we got going on. All right, so those were all the markets today. Active data this morning. Today is Thursday, so if you guys are in here and you are on the trial, Dwayne, does it work on any market? Yeah, I'll go show it to you in just a minute, Dwayne, on a different market, okay? Let me just go through this here. Now, if you're gonna read the spreadsheet, you gotta read all CFTC risk disclosures down at the bottom. Today's the 14th day of July, 2022. Made 125 ticks in crude, 43 ticks in gold, and 11 ticks on the ES. Put us at 1817.50 on the morning session today. It took 6 minutes and 4 trades to get it to the goal for the day. At that point, we're up $100 a contract, and we took a total of 45 trades. So on the month now, we're at $11,395, and that's over 9 trading days, averaging $1,266 per contract per 2-hour trading day. We've gone 193 days since our last negative day, and we've gotten our goal for the day on 132 out of 132 days so far this year. Right, that puts us at $144,856 per contract on the year so far. And if you were to average that over every business day this year, we'd be at $1,097 per contract. So, if you were to quit trading when you got your goal for the day and you were to add 1 contract per month, so far this year, you would have only had to trade 18.36 hours, and you would have averaged $3,718 per hour on the year. All right. Now, if you haven't taken a free trial and you want to, go here to eminitrainingschool.com. On this page, all we ask for is your first name, your email, and your phone number. You can tell us the biggest trading challenge. It's at eminitrainingschool.com. Let me slow down. Tell us the biggest trading challenge so we can tailor one-on-one training just for you. Hit that send button. You'll be sent the confirmation link. You must click on the confirmation link. Okay. If you don't click that link, we don't know you took the free trial. Now, let me go and answer that question for Dwayne. other coin. This right here is crude oil, okay, and it's on a 20 tick range. But if you want to look at the ES, this is the ES on a 20 tick range. I can go and change the time frame, but it's the same stuff. 20 ticks on the ES. It's all the same. Okay, and we can change this to something more manageable, like the 7 tick range. And this is what we're using this morning. This isn't with the sidebar on it. To actually put the bar colors on, I had turned them off in here for an illustration this morning. This is with the bar colors on. Okay. I don't know if you noticed that within the sidebar, you can turn the bar colors on and off if you want to, because the sidebar contains everything else on the price panel. Yeah, where the heck was it? Ribbon bar color. Here it is. That turns the sidebar off. But yeah, it's the same thing. And this is the ES now, but I had originally been looking at it on the NQ on the 20 tick. Because how crazy the NQ is. So, you can see all the same things, right? Now, it's still a work in progress, and I don't know how we're going to roll out, as far as the arrows and stuff like that, I don't know how we're going to roll it out, when we're going to roll it out. I can tell you at a minimum, you're going to need to be a passport holder at a minimum. And I know, right now I know how to code it for TradingView, and I don't know if we can even do that for the other platforms. So I don't know how that's all going to work out when we get there. But right now, the focus right now is finishing up with them, all the little tweaks that I'm doing on just the regular, regular stuff in here for TradingView. That's the one that you guys see is this one. Okay, finishing up the tweaks on this, and getting it done in NinjaTrader. So you guys, all of you NinjaTrader users will have something too. All right, I'm hoping to get that done to you pretty soon here. All right. All right. That is it, guys. With that, I can pass it back out to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
Yes,
unless
sir.
anybody else had any more questions, I don't think so. But
I'm ready.
excellent. All right, I have another meeting in 5 minutes, so I am gonna jump to that one.
Okay, give me the recap of the recap, and then you can take off.
All right, today it was 6 minutes and 4 trades, $100 a contract. 6 minutes and 4 trades.
Good job.
Thank you. Thank you. All right.
All right, guys, that is what happened the first 2 hours since the Wall Street Open. Now, here's what's happened since the global markets opened Sunday night at 6 p.m. Eastern. If you're new to futures, the Globex markets open now Monday morning at 9:30 a.m. Eastern when stocks open. It's Sunday night at 6 p.m. Eastern, and they remain open around the clock till Friday afternoon at 5 p.m. Eastern. There is a 1 hour break each day from 5 p.m. to 6 p.m. Today's Thursday. Thursday will end at 5 p.m. Eastern. There'll be an hour break, and then at 6 p.m. Eastern the markets will reopen, and that will officially become the Friday session. So, since the markets opened Sunday night, we've issued a total of 80 alerts. Now that's logic. The concierge trade alerts are separate. We'll look at those in a moment. We've had 80 logic alerts, 23 never triggered, still waiting on the outcome of 7. We've had 50 actionable alerts, of which 11 or 22% would have been stopped out based on not risking more than $300 per contract, per trade, less when possible, using market structure and a very simple 3-step process we teach all of our passport holders. Now, the Logic 247 alerts are based on current price action and logic. Good old-fashioned logic. Once you understand, there was a question earlier from one of our members, Dwayne, Will it work on every market? Everything that we do, everything we teach, every indicator we provide is fluid across every market, every time frame, futures, stocks, forex, crypto, daily, weekly, monthly, 1 minute, 30 minute, 5 minute, tick chart, range chart, because it's built on the underlying principle of which markets operate. And it's really quite simple. You won't hear it anywhere else but here. But price moves the same every day. Markets do the same thing every day, just in a slightly different way. But here's how they do it. Price moves from support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. The indicators simply provide you with a dynamic visual support and resistance. The weekly trading zones provide you with fixed support and resistance. Once the weekly trading zones are published for our members Monday morning at 6:15 a.m. Eastern, they're carved in stone for the entire week. Now, this week has been a big week, and we've blown out the lowest weekly trading zone on a number of markets. Now, by close of business tomorrow, we could see a different story. In fact, there have been quite a few weeks since December 14th of 2009, which is when we first published the weekly trading zones. There have been a handful of occasions, maybe 2 handfuls, because that's a long time, where price actually closes below the lowest weekly zone or closes above the highest weekly zone. What happens more often is price will get below the lowest or above the highest, but by close of business on Friday, it will be back at or below the highest zone, or back to or above the lowest weekly trading zone. So remember, Logic 247 is based on current price action. The purpose of the alerts is to help you learn how to spot windows of opportunity on your own. You do not want to spend the rest of your life tied to somebody or something telling you when to get in and when to get out. You want to learn how to read a chart, to assess what's going on, and see as clearly as we do where the entry is, where the obstacles are. You want to learn to read the chart just like a newspaper or even a mystery novel. Okay? Now, when I say they're based on current price action, once the alert goes out, you still have plenty of time to get to your computer, study the alert, study your chart, and understand why that is a window of opportunity. Okay? We do the best we can to make it as simple as possible. You're getting trained 2 hours a day in the live training room in live markets, where either Michael or Valerie, whoever's taking off trades that day, they explain every move they make, every trade they take, and the rule behind it. It's incredibly important that you master the mechanical model before you start exploring the world of discretionary trading. Okay? But the alerts, if you'll study them and study your chart, you'll start to see the clouds will part. And you'll start messaging me in Telegram going, hey, I just spotted a window of opportunity from here to here. How does that look to you? And then I'll message back, looks good. Or maybe I'll see an obstacle that you didn't see, and if so, I'll message that back to you. We provide support for all of our members literally around the clock via the various Telegram channels. So whether you're on the free trial or you have become a member, it's important that you get tied into Telegram so that you can truly become a part of the community, so that you can meet the other traders, talk to them about their trades, Stefan and others are very generous with sharing their charts and trade setups and trades they took. It's a very positive, encouraging, and uplifting environment. Many of the chat rooms and forums, as you know, on the internet that have anything to do with trading, everybody's crying the blues because they're not making money, number one. They've been lied to. They've been ripped off again. That thing that looked so good right above the add to cart button, like we talked about earlier. You gotta stop clicking that button. We provide everything a trader needs, all under one roof at one low price. Okay? Now, over the last 206 weeks and 11,200 individual alerts, all of which are trend trades as defined by the 30-minute chart, price, and the BBC, on average 20% of the alerts do get stopped out. Why? Because the order flow switches in the middle of the trade. Now, it's the institutional money that drives the markets. The institutions, the hedge funds, the Goldman Sachs of the world, they look at daily charts, weekly charts, monthly charts, the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. Why? Because they have deeper pockets. They can withstand a much further drawdown in pursuit of their goal, whatever that might be, whether it's to the upside or the downside. So don't try to fight above your weight, below your weight class. Really important. It's a real fast way to blow up an account. Okay, so you got this part. Logic alerts around the clock, based on logic, 24/7. Okay. Now, our original alert service, the concierge trade alerts, they're different. Different in a couple of ways. Number one, instead of being based on current price action, they're based on historic price action. And when historic price action meets current price action, that's where you'll find some of your best high probability, low risk trade opportunities. We cover the same markets both in logic and with the CTAs. The CTAs has their own channel for our members, just as the logic alerts have their own channel in Telegram for our members. We cover ES, Dow, Russell, crude oil, NQ, gold, silver, the euro, and bonds. Now, if you want to grab a screenshot, do it right now, because we're going to walk through each one of these individual markets. And there's the top half. Since we added euro and bonds, they don't all fit on one screen. So snap it there, snap it there. And the economic news this morning was obviously far worse than expected. And I'm sure you've already looked at that, you've heard about it. So I'm just going to go straight to the daily chart, show you what's important, let you get back to work. Most recent swing high was put in on March 29th. The most recent swing low was put in on June 17th. We talked about this triple bottom, which yesterday made a quadruple bottom. These are daily candles. The low, the low, the low, the low. Today we broke that. Okay? And the low of the session so far is 37.23 3/4. So if the market were to turn around today, there is above us what seems like an almost insurmountable number of obstacles. step line, BBC, red and falling, 24% reverse fib, trend line, this swing high, these swing highs, and then we're at the 38% reverse fib where there was a bearish cross, which this is resistance times 2. This here is resistance times 4. And so the logical thing to happen from here, now you see we've pulled back up. When you break a high or break a low, the market will typically return to that area before it continues its move. And so that's what we've seen happen. Prices pulled back up. And the logical thing for the market to do from here, you guessed it, is to trade lower. Question is, if we get to the June 17th low, will it hold or not? There's no man or machine or algorithm that can predict with certainty what's going to happen, okay? And if you're still finding yourself believing those websites and those emails that promise to read tomorrow's headlines today, you really should consider not wasting time and treasure on false promises, okay? The only thing we promise is to teach you our strategy, our methodology, how to read the indicators, how to integrate the weekly trading zones. Beyond that, the ball's in your court, okay? But we're completely transparent in everything that we do. In the live training room, we're putting on taking off trades live in real time while you watch and ask questions and trade along in the simulator until you qualify to actually start trading live, okay? And our 24/20 blueprint walks you through the process of trading in sim till you qualify to go live. It notifies you when it's okay to go live with one contract. Then you have to increase your account balance by $2,000 to add a second contract. The big difference between the first and second contract is the first contract is funded with your startup capital. But the second contract, when the time comes, is funded with profit you earned in the market. That's how you build a sustainable trading business. The blueprint's going to let you know when it's time to add number 3, number 4, number 5, number 10. But you only add one at a time. And you only add with profit you earned in the market. If you'll stick to that blueprint as it's written, not going to make it impossible to blow up another account, but it's going to be a real slow process, and you're going to have to break some rules in the process. So, welcome to the process. From here, the chart tells us we should anticipate lower prices today. If we break the current low of the day, it could be, there's one more little spot right here. We'll call it 3,700, okay? Potential support there. And then if that's broken, there's really nothing but air down to that June 17th low, okay? All right, we always start with the daily chart because the money that moves the markets, the Goldman Sachs of the world, the hedge funds, again, they're looking at daily, weekly, and monthly charts. So by looking at the daily chart of whatever market you trade, it might be crude, it might be gold, it might be Google, it might be Apple, it might be Forex Bear, it might be your favorite crypto. Look at the daily chart to see what the institutional money is doing. And by applying logic, you're able to understand what is most likely to happen next. In fact, after a couple weeks with us, You should be able to look at any 30-minute chart of any market and know with certainty what the next high probability move is, with the understanding that 20% of the time, price is actually going to do something other than what appeared to be the next logical thing. So, continue to spend time and treasure trying to figure out a way to never get stopped out. And 3 years from now, 5 years from now, 10 years from now, you'll still be stuck with the same dilemma. Professional traders waste no time and no treasure chasing the black cat in the dark that doesn't even exist. They understand that being stopped out is as much a part of trading as breathing is a part of life. And until you embrace that, it's going to be impossible to build a sustainable, consistently profitable trading business. Okay? All right, let's go to the 30-minute ES. The vertical line on each of these charts separates today, Thursday, from yesterday, Wednesday. Back here is Tuesday. So the CTAs that went out last night, and they got out at 6:30. Now, the CTA report, the one I just showed you and encourage you to take a snapshot of, it's a static report, good for the entire session until the next set of numbers come out the following evening. The CTA report is published for our members every evening, every trading day, beginning Sunday night through Thursday night, shortly after the Globex Open. Last night, numbers came out at 6:30. Now, what you should do is, as you can see, I've drawn a line in the sand at 38.23. I've drawn a line in the sand at 37.89. These numbers were posted last night at 6:30 p.m. Eastern. So what you have to do is, whatever market you trade, okay, make note of where price is at this moment in time. Because from that point forward, if price starts trending up towards 38.23, that's bullish, our strategy will look for opportunities to be long the market. Price starts trending down towards 37.89, that's bearish, our strategy will look for opportunities to be short the market. In either case, that's where you're going to use Logic 247 and everything you learn in the live training room every single day to yourself find opportunities to be long or short the market based upon what the chart is telling you to do. Okay. All right, on the ES, this is where we opened. We came down, we triggered 37.89. We put in a low at 37.93 and a half. I'm sorry, 37.83. 6 points, $50 a point, $300 per contract traded. Now, because the CTA numbers are important prices, important areas, it's important that you understand important prices, important areas are almost always tested. That's a long way of saying once an alert triggers, there's a greater probability of it triggering multiple times than not triggering multiple times. Often we'll see one CTA number trigger 2, 3, 4, 5, as many as 10 times in the course of a session. So we get a trigger. Remember, these are 30-minute candles. And then price gets back above the trigger, which is 37.89, and drops to 37.76. That's 13 points at $50 a point, $600 per contract traded. Then price got back above the trigger, hit the BBC. When price pulls up to the BBC, we expect that to be resistance. It just stands for bull, bear, cross. Okay? When price crosses below it, we expect lower prices. When price crosses above it, we expect higher prices. BBC, bull, bear, cross. The other indicator is called the CFMA1. That's the clinical term. I just refer to it as blue and climbing, red and falling. I think for obvious reasons, one represents resistance or an anticipation of lower prices. The other represents support or an anticipation of higher prices. As you can see, once we turn to blue and climbing, we got higher prices until we closed back below the BBC. Now we're ready to go back to work again. From 37.89, we dropped to, from 89, we dropped to 87 and a quarter, 1 3/4 points. And we got back above the trigger, and we dropped again, this time to 37.85. That's 4 points or $200 per contract traded. And then we got back above the trigger, dropped again, this time down to 37.78. That's 11 points, $50 a point, $550 per contract traded. And then we got back above the trigger, and we dropped all the way to the target. Published entry, published target. On every alert, whether it's a logic or concierge, if it's a long trade, then the final trade to target will be the weekly zone above. If it's a short, it will be the weekly zone below. And this is the lowest weekly trading zone this week. So you see how we've spiked it, and then we got back above it. We won't know till tomorrow whether we close. But the idea of the weekly trading zones, I mean, when we had this huge drop yesterday, where the market finds support at the zone, resistance, support, that's how price flows. From support to resistance, back to support on every time frame. Not just on a 30-minute chart, not just on a daily chart, on a 1-minute chart, a 5-minute chart, a tick chart, a range chart. That's how price flows. Okay. So the indicators are your dynamic support and resistance, whereas the weekly trading zones are your fixed support and resistance. So from 37.89, we dropped to the zone at 37.49/50. So that's 39 points at $50 a point. That's just shy of $2,000 per contract traded. Once you earn the right to trade 10 contracts, then that's a $20,000 move. But you start out in sim, you earn the right to go live. You only go live with one. You only add additional contracts when the blueprint tells you to, and you only add with profit you earned in the market. Okay? We hit the zone, we found support, we spiked it a little bit, we pulled it back to the BBC, we spiked the BBC a little bit, but again, the pullback holds more often than it doesn't, and it sent us right back down to the zone, and we've run into blue and climbing, which is potential support. If we trade below blue and climbing, if we take out that previous 30-minute low, that gives us a window of opportunity. Okay, now that's a conservative window from about 37.42 down to 37.38. That's 4 points. That's $200 per contract traded. Now, if it's a momentum type move, I mean, if the bottom's falling out, then we'll probably challenge this low. But that's your initial window. Once you get through that window and take out that low, now you got another window. Okay. And of the 11,200 plus alerts in the alert channel, that's how every one of them is generated. By using the 30-minute chart as a roadmap to determine where windows of opportunity exist, and then you use the smaller time frame of your choice. It could be a 5-minute chart, it could be a range chart, it could be a tick chart. That's where you time your entry, and using market structure, set your stop loss. Because on an alert, you do not want to risk more than $300 per contract per trade, less when possible, using market structure and that simple 3-step process that we teach all of our passport holders. It's a very simple process. Now, there's no better way, no pure way of setting your stop loss than to query the chart and let the chart itself. Because the market's always right. No matter what market or time frame you trade, the clock on the wall is always price. Okay? So again, you pick the smaller time frame that you're comfortable with so that you can execute and set your stop loss using market structure. Now we've got support times 2. Blue and climbing and the zone. When price moves up to a zone, we expect resistance. When it comes down to a zone, we expect support. This support could hold. However, we've got an obstacle overhead. When the step line is directly above price, that's an obstacle, potential resistance. The BBC, potential resistance. Even when it spikes it, it holds more often than it doesn't. Of course, we know there'll be times when it doesn't hold. If that weren't true, we'd end up with a sideways static market that would be literally untradeable. Okay? All right. So that covers the S&P on the Dow. Vertical line separates today, Thursday, from yesterday. Here's the opening candle. Down we come. We trigger 36.50 down to 35.60. That's 90 points, $5 a point, $450 per contract traded. That's what the market made available. Okay. We had an initial trigger here that dropped at 36.10. That's 40 points, $200 per contract traded. Then back above the trigger, and the one we just talked about. Then we pull up to the BBC, the pullback holds. Down we come again at 6.50. We drop to 6.30. That's 20 points, $100 per contract traded. Then back above the trigger, down we go again, and on this trigger we make it all the way to the target from 6.50 to the zone is 3445/3450. From 6.50 to 4.50, 200 points, $5 a point, $1,000 per contract traded. Now, only 3 things happen at a weekly trading zone. The most common is what you see right here, consolidation. After the consolidation, we caught a leg to the downside. We pulled back up to the zone. When price pulls up to a zone, we expect it to be resistance, and it was. We spiked the BBC, so the pullback to the BBC held, the pullback to the weekly zone held, and that sent us down to blue and climbing, which is potential support. If we break that potential support, And that gives us a nice window of opportunity. And if we take out that low, another window. Okay? Opportunity all over the place. You just have to learn not only the methodology and the strategy and how to read the indicators, and that part's very simple. Difficult part is the one thing that we can't give you, sell you, rent you, loan you, and that's patience and self-discipline. You see, as badly as you might want to trade the Dow right now, there's not a valid trade opportunity at the moment based on the 30-minute roadmap. Patience and self-discipline. On the Russell, here's where we opened last night. The Russell also pays $50 a point. The trigger was 17.19. First trigger took us down to 16.2. So that's almost $150 per contract traded. Back above the trigger, down we go again. This time the low is 17.11.5. We'll just be conservative and call it 17.12. That's 7 points, $50 a point, $350 per contract traded. Maybe trigger again from 19 down to 17. It's 2 points, $100 per contract traded. Back above the trigger, down we go again to 17.14. It's 5 points, $50 a point, $250 per contract traded. And we get back above the trigger. Hopefully you're starting to understand, if you're new, what I mean when I say once an alert triggers, there's a greater probability of it triggering multiple times than not triggering multiple times. And on this final trigger, it gets us almost to the target, and it still may. Target is the zone below at 1680 / 1681. Okay, so the swing low so far is 83. 1683. So that's 17 and 19. 36 at $50 a point. Once you know how much each market pays, it's pretty easy to do that math. Okay, the S&P is $50 a point, Russell's $50 a point, the Dow's $5 a point, the NQ, where we're headed next, is $20 a point. The short trigger was 11,699. And the first drop took us to 687. It's 12 points, $240 per contract traded. We got back above the trigger, triggered again, and we dropped to 611, 663. So 99 to 69 would be 30. So it's 37 times 20. That's just shy of $800 per contract traded. And we get back above the trigger, and we dribble over the line here from 99 down to 93. That's $120 per contract traded. Back above the trigger, down we go again. This time we make it to 11,669. So let's be conservative and call it 11,670. That's basically 30 points, 29. At $20 a point, almost $600 per contract traded. Then we get back above the trigger, and down we go again. And this time we make it to 11,601. So that's 98 points at $20 a point. It's just shy of $2,000 per contract trade. And then we pulled up to the BBC, the pullback held, and then we went on to put down an even lower low at 11,511. And then we get above the BBC and we get above the trigger. However, when price is above the BBC, we're not interested in shorting right into potential support. Okay? On the 30-minute roadmap, if price is below the BBC, you're looking for short trades. Once price gets above the BBC, you're looking for long trades. And so the actual window of opportunity here would be roughly from 675 up to 695. Look, there it goes right there. Okay. We drop to the BBC. Support held. This candle reached down and touched that support at blue and climbing. And now here goes price, heading back to the important price support area. However, if we get above it, we won't be looking to short it for the same reason here. Okay, so you have a valid long trade up to the obvious obstacles. If those obstacles are taken out, then you've got this bearish cross right here. That's a potential obstacle. These swing highs. And another bearish cross which lines up with this swing high. So that's a real strong area for potential resistance. Then up to the zone, and then there's the long trigger. See the green candle continue to move. Okay, that covers all of the major indices: the S&P, the Dow, the Russell, the NQ. Let's go to crude oil. All right, here we just got rejected. Here we dropped to 95.47. It's $150 per contract traded, just shy of that. Then we get back above the trigger, get below the BBC, and this time we go right to the target. Now the zone is 95.05/95.10, so that's $500 per contract traded. Back above the trigger, and we drop $180 per contract traded. Then we get back above the trigger and we drop another $500 plus per contract traded. See how it continued to go. Then we pull back to the BBC in the weekly trading zone. The resistance holds, and that sends us down to the low of the session, which is 90.50. Now, from here to here, that's about a $5,000 per contract move. Not a trade you're going to take when you're just learning how to trade, but it gives you an idea of what you have to look forward to in the future. Okay, so now price is above the BBC, so we had a nice long opportunity right up to the weekly zone. If we get above the trigger, that won't be a valid short trigger because price is above the BBC. On gold, gold gave us one trigger, 1723 down to the target, which is on every short. It's the weekly zone below, every long, the weekly zone above. This is the final trade to target. The logic alerts have multiple targets. Okay, so from 1723 to 1716, that would be $700 per contract traded. And then we continued lower, much lower, down to 1695. That's about a $3,000 move. We pull back to the BBC, the pullback holds, and that sends us down to, now this is a good teaching moment right here. When red and falling gets directly below price, it will most often become support, because red and falling, if it gets directly below the current 30-minute candle, it's probably on its way to turning into blue and climbing, which represents support. Now, there's a counter trend trade here, and there's nothing wrong with counter trend trades, but before you delve into the counter trend trades, make sure you learn how to trade with the trend, with the bigger wind at your back. Okay? Trend trades have a higher probability, low risk personality than counter trend trades. And we've kind of proven that over the last 11,200 individual alerts, of which every one is a trend trade as defined by the 30-minute chart, by a price, and by the BBC. Okay? So once price pulled up to the BBC and got rejected, okay, that did give a nice opportunity from 1709 down to 1704. That's a $500 per contract move. Silver, 1904 was the trigger. The first trigger took us down to 1899. So that's $250 per contract traded. Back above the trigger, down again. So that's also $250 per contract traded. The low of this candle was 99, so that's 5 pennies. 2 pennies is $100. So if you take 5 and divide it by 2, it's 2.5, $250 per contract move. When we get back above the trigger, down we go again, and we hit the target at 1895. So that's $450 per contract traded. And then price continued down to the next zone, and now it's worked its way all the way down to the lowest weekly trading zone. But you'll notice that on the way down, price stayed on the left side of red and falling. In the beginning, you're going to be looking for a couple points a day to build up your account size so you can increase the number of contracts that you trade. But as you gain experience, you'll understand that on your 30-minute chart, as long as price, if you're in a short, using a short as an example, just like over here, on a long, as long as price stays on the left side of blue and climbing, great trade. As long as price on a short stays on the left side of red and falling. Now notice what happened here as we hit this weekly zone. The step line crossed over red and falling. What does that tell us? That tells us that price, if this green candle closes above the step line, we've already had one close above it, but what the market's trying to do is pull back to the BBC. Price always reverts to the mean. In our case, the mean just happens to be green, and we call it the BBC. Okay? Price always reverts to the mean. Remember that. It's important, and it's something you need to understand in order to build the sustainable, consistently profitable trading business. Euro. Now, when the euro goes from 1.01400 down to 1.01300, that's $125 per contract traded. 400, 300, 200, 100. Get the idea? Each one of those is worth $125 per contract traded. So the trigger was 100,990, and we dropped to the zone at 100,850. Okay, 990 to 890. That would be $125 per contract traded. But the target was down at 100,855. So there was more than $125 per contract traded. And we've not got back above the trigger, and we got rejected at the trigger. But even had we got above it, it's not a short we would take because price is above the BBC. Okay, final market. The bonds. And on the bonds, notice how his price pulls up to the zone, resistance. We spike it a little, but it's ultimately resistance. Sends us down to the short trigger at 138.25 and sends us down to the target. And that's it. One last look at the daily chart. Okay. Buyers are hanging in there. The sellers are being patient. Because if buyers come to the conclusion that they can't move price any higher, no matter how many contracts they buy, what are they going to do? Stop buying. And what happens when buyers stop buying? Things like this. It takes financial commitment for price to rise. But in order for price to drop, all it takes is for buyers to stop buying, to step back and wait for a better price. That's when those funds that specialize in short selling come out of the woodwork and have the opportunity to really hammer price down because they have no real resistance. I mean, they're running over retail traders like crazy on the way down, but the institutions are waiting until they can see the ability to move price. If you want to become a passport holder, you've already taken your free trial, go to eminifuturestrading.com. Everything I said today will start to make sense to you because you'll hear it over and over again and again, day after day. We don't change. We're the constant integer in the equation. You hear people say, hey, the markets are always evolving. Yeah. And that's where a lot of traders get tripped up. They feel like they got to change their swing every time they step up to the plate. Just don't fall for that. Okay? Find a definable edge. That's what we'll teach you. Indicators that you can easily read, we'll provide. We'll give you a living, breathing teacher every day for 2 hours, putting on, taking off trades live in real time, explaining every move they make, every trade they take, and the rule behind it. While you trade along in sim and ask question after question after question after question. Remember, your questions are not an interruption. Your questions are the entire purpose of the live training room. We can't teach you what we don't know, you don't know. And we won't know until you ask the question. There's no silly questions, forget about all that. The only ones who even see what you type Would be myself, Michael, Valerie, Bert if he's around. And by no means are we here to judge you. We're here to help you. We want you to become self-sufficient. We want you to reach a point where you no longer have to depend on us, because you can spot the windows of opportunity yourself. You can time your entry. You can set your stop loss. And you become a self-sufficient trader. And that's what you want. And then you can start thinking about the freedom that trading brings. Now, trading is not just an opportunity to make money, but you can trade from anywhere in the world. As long as you have electricity you can depend on and an internet connection that you can depend on. Fast, robust, reliable, dependable. And then you're free to become a digital nomad, a trading nomad. Wander the world, wherever your feet take you. All right, let's wrap this thing up for today with our good word for the day, as we do every day. Daniel 3:29 says, "There's no other God who can deliver like this." But we, that's you and I, we have to prove ourselves faithful. After you grew up going to Sunday school, no doubt you know the story of the 3 Hebrew boys. I bet you even remember their names: Meshach, Shadrach, and Abednego. When my son was 4 or 5 years old, he had that memorized already. Now, the story of those 3 Hebrew children in the fiery furnace teaches us 4 lessons. Number 1, doing God's will can actually land you in trouble. Don't expect the world to appreciate you. Look at Jesus in John 1:4-5. In him was life, and the life was the light of men. And the light shines in the darkness, and the darkness could not comprehend it. Number 2, God will be with you in your trouble. When Nebuchadnezzar looked into the fire, he said, "I see 4 men loose." See, he had thrown in the 3 Hebrew boys. But he says, "I see 4 men walking in the midst of the fire, and they are not hurt. And the form of the 4th is like the Son of God." Daniel 3:25. Instead of destroying them, the fire destroyed the ropes that bound them, setting them free. Be encouraged. It may look like circumstances have you locked in, but God is going to vindicate you and bring you out victoriously. Number 3, it's your trouble that produces your testimony. Or as you may have heard it said, without a test, you won't have a testimony. People are watching you. The things they're trusting in don't work. And they're wondering if what you trust in does work. Your faithfulness to God and his intervention on your behalf will touch their lives in ways that your theology never will. Everyone in Babylon knew what the Hebrew children believed, but they wanted to know, does it work when you're in the fire, in the midst of your trouble, your situation, your circumstance? Well, It does. And number 4, the greater your trouble, the greater your blessing. Daniel 3:30. Then the king who had thrown them into the fiery furnace, then the king promoted Shadrach, Meshach, and Abednego in the province of Babylon. Now, here is a scriptural principle you can count on. When you prove yourself faithful in times of trouble, God will promote you to higher levels of blessing. Prove yourself faithful. That's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.